In today's video, we're going to be talking about the human biases that wreck most investors. And what I see in crypto and DeFi a lot is this kind of unawareness of the psychology of a human being, and people are making the exact opposite decision that they should be making, which is why a very small percentage of investors in the crypto DeFi space see success and everyone else's exit liquidity, or everyone else is making the exact wrong decision at the exact wrong time when they know better. But these biases and these emotions that come up, but they're unaware of it. And then after the fact, they kind of look back and say, why did I do that? There's going to be 9 biases we're going to look at today. I'm going to go through them fairly quickly. All I want us to do, and please study this video because this is literally one of the most important things you can understand as an investor. And I know many people will still skip off this video and go to look at what is the biggest pool, what's the best position, where can I make the most money, what assets should I invest in? And they'll keep repeating this pattern until they actually stop for long enough to study these biases and write them on your wall in front of you. And every time you feel like you're falling into one of these, just become aware and say, hey, maybe I should go left because I'm thinking about going right here, but I'm falling into a trap. Number 1, overconfidence bias. Investors often overestimate their own ability to predict market movements, leading to excessive risk-taking and poor investment decisions. This is like looking at a chart and feeling like you can predict where the market is going next, and you place a way too big bet. You don't think about risk reward. You don't think about, hey, if I'm wrong, what is this going to cost me? Every time I'm making an investment, whether it's in a liquidity pool, whether it's a buy and hold, whether it's more of a short-term hold, whether it's a swing trade, I'm saying this is where I think the market is going to go. But I also know that I can be wrong. If I'm wrong, what is the cost I'm willing to pay? When do I get out of this trade or this position or this hold or this asset into this ecosystem or this team? If I'm wrong, what will this cost me? And then if I'm willing to pay that potential cost, then I get into that position. 2, confirmation bias. This is the tendency to seek out information that confirms one's preconceptions. We want to find evidence that what we think is right, and we kind of ignore the evidence or the facts or the data. Think about this in like when people have arguments over something. They'll seek out the information that benefits them and they'll ignore the rest, while ignoring or dismissing contradictory evidence. It can lead investors to cling to poor investment choices and miss better opportunities. So on YouTube, I don't listen to some idiot who's like, blah, 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 blah. Like they're just keyboard warriors. They got no YouTube channel. They have no followers, and they need attention, so they post on other people's channels. I ignore all that. But I do spend a lot of time researching and going on, people of influence and of research, and I've been in the game for a while, who don't see things the way I see them. Hey, Bitcoin is going to zero. I watch that kind of content. Or hey, Bitcoin and crypto can't survive the next 25 years, and here's why. Because I want all the information. Now, after going through all the information, I'm just like, I think the probability of crypto and DeFi being bigger in 10 years versus it being smaller is highly likely. But I want to look for information that goes against my belief, because I may find something there that helps shape a bigger picture and helps make different decisions. By the way, it's also why I like yield farming and liquidity pools and creating more of the assets that I hold, because to me, it's a bit of a hedge as well. Okay, well, if prices drop a little bit and maybe they don't come back on a certain asset, but I have more of it, that's pretty sweet. Loss aversion. The pain of losing money is psychology more significant than the pleasure of gaining the same amount. They've done a lot of studies on this. You can have like a 3 times, I think investors started saying yes to something if it was 4 times more likely to happen. Meaning, if you flip a coin and you have a 50% chance of losing, all your money, or you have a 50% chance of winning times 2, most investors said, no, I'm not playing that game. But if it was a coin toss of, hey, you're going to lose all your money or you're going to gain 3x, some decided to flip the coin. Then when it was a 4x, most investors started saying, yep, I'll flip the coin. And that's kind of a bias of pain it's more painful to lose than it is joyful to win. And oftentimes we won't get into something and we won't place a bet, even if there's a high probability on the upside of actually winning, which is why a lot of people don't invest in the first place, because their perceived pain of losing money is greater than actually making some. And so they just stay out of the game completely. I see this happen a lot, by the way. Herd mentality. Investors can often follow the crowd, buying into trends without conducting their own research. This plagues crypto and DeFi. Their favorite YouTuber or their favorite person or the news says, buy this. And then everyone rushes to it. You kind of sit on the sidelines. Everyone rushes to it. Now it's at its peak all-time high. Now people get in, following the herd. We want to get into stuff early, and we want to position ourselves early. Recency bias, placing too much emphasis on recent events or trends that can lead investors to believe that these will continue indefinitely, causing them to make decisions based on short-term patterns rather than long-term outlook. I see this all of the time. Volumes are up like crazy. I'm getting into this. And then volumes drop, and they're like, oh, I'm getting out of it now. I'm chasing the next thing. When it's like, if we zoom out and we realize, hey, here's the average volume and here's the average returns. Or, oh, this project did well for me in the last 6 months, so it must continue doing well in the next 6 months. Not always true. We have to fight that bias. Availability bias. Investors tend to rely on information that is most readily available or recent, rather than seeking out all relevant data. So they'll look at the last couple days of information and say, oh, that's a sure thing, I'm doing it. And they fail to look at the last 3-6 months or information before that. It's a human bias beyond investing too. We just remember really recent events and we forget the 6 months, 12 months, 2 years before that. This is true for like the entire investing market. I don't care what you're investing in. It's like, everything went down 20%. I'm selling on the low and I'm out. Well, it's like, no. That was just the last week. We're down 20%, but over the last month, we're up 60 total. So what are we doing here? Why? What? Do we forget that quick? A disposition effect. This is the tendency to sell assets that have increased in value while holding on to assets that have dropped in value. There is a time sometimes to cut your losses. Yet sometimes we'll see something going up, and so we take profit and we sell, hopefully, and we see something drop. And we're holding on to it. There's also another bias that's coming up of like we because we're invested in it, we're more emotionally involved in it. And it may be time to cut that. I see people invest in some kind of meme coins or crap coins or lower market cap, and the project doesn't take off. And they're holding on to it thinking it'll come back when that team is like no longer even doing anything. Probably better to cut your loss. There's an opportunity cost you're paying, move that capital and do something else with it, actually make returns. Endowment effect. So investors often value an asset more highly simply because they own it, leading to irrational attachment. That's like on YouTube, you see it. I own this. It's the best. That's false. It's not the best. It may fit your portfolio well, but to call anything the best, you have to have this. That's such a bias. And when prices are up, we don't take profit because we think it'll go on forever because we own it. And then when prices drop, or if it's a more speculative play, then we just keep holding on to it because we still think it's the best. And I'm like, it's probably not. And finally, sunk cost fallacy. Continuing an endeavor once an investment in money, effort, or time has been made, even when it would be better to abandon it because of the reluctancy to waste the initial investment. There's a lot of people investing in crap coins, crap tokens. Most of those are going to zero. Let's just be clear here. There's tens of thousands of projects, coins, and tokens. I think over the next 10 years, a lot of that is going to zero. This is why we stick to a lot of blue chip fundamental projects that kind of prop up the entire ecosystem, the whole DeFi space. I think a lot of people have a sunk cost in something that they maybe believed in 2-3 years ago or even 6 months ago. And it's just like, why are we holding on to it? And I believe that these biases, we're never not going to fall into them. We're never not going to fall into them. This is so deeply ingrained in our freaking DNA, in our brains, in our psychology, that it's just, we ain't getting away from this. The key here is awareness, and it's why so few people win this game. All they are is aware of this, and then when they feel like they're making decisions based on a bias, they can just slow down for a minute and say, let me zoom out, become a little aware, and let me look at this from a higher level. and combat or make the opposite decision that I was about to make because that decision was based on some bias and it wasn't actually sound. But if I can step out of that for a minute, I can see, hey, this is the best decision. It's not the easier decision. Every part of me wants to make this decision, but I'm going to fight that bias and that kind of deep emotion, and I'm going to make this decision. And if you study most great investors, whether it's crypto, DeFi, or anything else, they'll pretty much say the same thing. Just do the opposite of what most people do, because most people are falling into this stuff here. Study this video a few times. I would highly recommend take notes, like screenshot this and then take some notes, put it in front of you on your computer. And as you do your thing in the crypto DeFi space, have a look through this, study this stuff. And to me now, I've studied this so much that when it's like a red beacon high, like just lights up in my brain when I'm about to make a stupid decision based on a bias. And I'm just like, whoa, Lucas, you don't know everything. You're a little overconfident here. Where could you be wrong? Hey, I know everyone's hyped up on this. Are you following the herd? Do your research. Hey, I'm really invested in this stuff. Slow down, zoom out. Where could you be wrong? Etc. Like this video if you liked it. I know this is a little bit more boring than just like what's the best pool, but to me this is so fundamental. We have a really good mindset session coming up inside the UIG. We're really big on the investor mindset, investor psychology. I think it's why our members win over the normal win rate of most people in the crypto DeFi space, because we're really big on this. If you want to study some of this, we're actually building out an entire section inside the UIG all around the mentality of a successful investor. Plus, we're going to be interviewing millionaire investors who started from scratch, and it's going to be interactive, so members can actually ask questions, interact, and I think proximity is power and environment is everything. So it'll be fun to kind of interview a lot of these super successful people. So one guy's 27 and created a multi-million-dollar portfolio. It's like, what do they know that we may not know? And let's extract that information and then apply it. So a lot of stuff is coming in the UIG. If you're interested in exploring that, I will leave a link below. And with that said, like this video, subscribe to this channel if you have found value in it. I'm going to leave 4 videos in the 4 corners of your screen. Let's dive in. Let's keep studying this stuff. And with that said, I'm going to get out of here. Peace.